All right. So where were we? Where did we stop? Where were we? Okay. Because presently, where were we? Where did we stop on gold? On the last class. You know, last week was supposed to be for trend lines. Can you guys hear me? Yeah, the recording is on. The recording is on. Okay. So last week was supposed to be for trend lines, but I spent Saturday teaching something else because of I wanted to explain something that I felt like you guys didn't get quite. And on Sunday, I think classes didn't hold because everybody had something to do and no one was going to attend. So today we are back again, and I don't know. Let's just go back to trend lines. Let's just go back to trend lines and finish up what we didn't finish before. Right. So for the trend lines, like I said before, trend lines you can use that for as a confirmation for your zone. Like if you have a zone where you're already marked out to enter your trade, let's say if you have this A resistance here, and then after everything, let me say you have your whole structure shift, structure break, whatever, liquidity, right? You come to the conclusion that this here is your entry point, right? So what you're going to need is like, you need to see a trend line leading into this level. So it's either you have, let's say you have a reversal trend line, which will be price making highs and higher highs all the way till it touch there, then you expect a drop, something like this. So this will be your first point, second point, and third touch is the entry. So this is what you'll be expecting, something like this. Okay. So you expect something like this. From third touch. Right? So this would be what you expect. So now, like I said before, your trend line, you need three, only three things you need in your trend line: your first, your second, and your third points. Right? Now, and I told you that you're going to mark from the body. When we mark trend line for entries, if you're marking trend line for trend line liquidities, you mark from the week, like for liquidities, yeah? You mark from the week, but you're marking the trend line for entries, you're going to mark from the body. First and second point, you're going to mark from the body. While the third point has to be a week, which means the third point, the body doesn't have to close above the trend line. If not, it's going to be invalidated. It has to be a week. So the week could go as far as here and end up rejecting. But once it rejects the trend line, remember I told you guys, our trend line is also a type of what support and resistance. So if it rejects the trend line, it's also like saying that price rejected that area of resistance, right? So this is the first type of trend line you could look out for. If as a case study, this is your entry point, this resistance here is your entry point. So this is the second type of trend line you could look out for if that's your entry point and you want to take a sell. So you could look out for, let's say, if price had previously done something like this, okay, if price has previously done something like this, right? So price has previously done something like, and then you have this low, this low. So this is going to be like a bullish continuation trend line, right? First point, second point. But instead of a touch and fly on the third point, price broke it. So once price broke it, then this becomes what? A break and retest, right? So if price ever comes back like this, taps here and rejects with the trend line and your resistance as well, it's going to be what? A nice break and retest trend line. Example. So the next one you want to look out for is what? The continuation trend line, because this are the three trend lines I use. So you want to look for the continuation trend line. So what's the continuation trend line? Continuation trend line is simply, let's say you have something like price doing something like this, and then going down. Price is in a downtrend, and then while price is a downtrend, you have this trend line. You mark this high, right? So marking this high and this high, you expect price to come here, tap and reject. Price comes here, rejects you, tap the resistance and rejects the trend line, right? Didn't break above the trend line. Let me mark this better. Okay, so this is better. The confirmation trend line. Okay, so this is your first point, second point. So third point is supposed to be your entry. So if it happens like this, right? So this is your trend line entry. So these are trend line and vice versa for the bullish scenario. So let's go back and just look at some trend line examples. Trend line is not a very big topic. It's a topic that is actually not too big and wouldn't need too much stress to teach. So it's going to be fast. I was supposed to finish trend lines on Sunday, but Saturday I thought something else. So I think for this sell here, I think we had a good try. I didn't use trend line for this, so I didn't use trend line, but let me just look for trend lines to match it for the sake of examples. Okay. Nothing, you could check the 4 hours trend line. The best time frames I use for my trend lines, I use the 4 hours, the 3 hours, and the 4 hours. I mean the 4 hours, the 1 hour, and the 30 minutes. Those are the best time frames for trend lines for me. Those are the time frames I use to see my trend lines. Okay, let's see. So we had first point, second point, okay, third point. So I think this would be it. So if you put on the line chart, you could see that this was what? The body, first point, second point, right? Then for first point, second point, and third point happens to be the entry point, right? So price has to touch and reject. So third point, price never broke above the trend line. So giving us this continuation trend line was here on the 4 hour. So this is what gives us, right? This is a continuation trend line. Price never broke. You can see the wicks reject in the trend line. So price never broke above it. So that's another confluence for the trade. So this is a confluence you could use when taking a trade, a confluence or confirmation that you could use when taking a trade, trend line, right? A second confluence that you could use when taking a trade is also the market, the session in which price came to your entry. So if you look at this gold sell right here, this gold sell right here, right, you check out when price came to the entry was what? New York session. You can see price came to the entry in New York session. So like I said, I always like the entry being during a session. And if you watch the same way, the buy also triggered the New York session. Price triggered the sell in New York session, dropped all the way, triggered the buy in New York session as well. So price triggering in a session is a very big confluence. So these are things you could use for extra confirmation of your zones. Even though I don't really use trend lines that much, I don't really mark them. Sometimes I just check to see if there's one, but I don't mark it. And sometimes I mark it, I use it. So here we have this level, right? I think we have a reversal trend line playing out here. Let's see. Okay, not from that one. No. like I said, trend line is not you don't use trend line as your main criteria for a trade, right? You use trend line for confluence, right? So after you've done your due diligence, you've looked for your liquidity, you've analyzed the trade with every other thing you need to see, where you just want to see if maybe your level is correct. You could add a trend line for extra confluence. That's what you use a trend line for, right? So let's look for, just check if we have any trend line for that level. Okay, let's see if we have a trend line. There's nothing from here. Okay, so this I'm looking for a break and retest if we had any one. Okay. This one was a break and retest trend line, but it broke. You should see that the body of the black candle closed below the trend line, so it's not valid. It was a break and retest trend line that got broken, so it's not valid. This, let's see, this is a reversal trend line. Yeah. So maybe we don't have a good one on the 1 hour time frame. Let's check the 4 hours. If you have anyone in the 4 hours for that zone. 4 hour time frame. Let's check if we have anyone. No, trend line from here. So no trend line. Let's look at 30 minutes. And this is the last time frame I use for trend line. If I don't see on the 1 hour, I check 30. Don't see on 30, I check 4 hours. If I don't have any trend line on these three time frames, if I have other confluence, I take the trade. If I don't have any other confluence, just let it go. Yeah, on the 30 minutes is clear. You can see this trend line on 30 minutes. Very clear break and retest trend line. Let me show you. Okay, so on the 30-minute time frame, as you can see here, we have our first point, right? Marking from the body, we have the first point from here. First point, second point, right? So this is supposed to be what? A trend line, like a continuation trend line, like, and that's what a break and retest trend line is. So this was like supposed to give us what? A continuation trend line, right? First point, second point, third touch was supposed to what? Continue lower. But instead, okay, can you hear me now? Is it clear? Is my is my audio clear? Hello? Is my audio clear? Hello? All right. So like I was saying, we have here our first point, which is this high, the second point, which is this high. Right. So instead of third point, instead of the third point, to touch and fall. Price, instead of doing that, price broke. Price broke above, right? So if price happens to retest this trend line and buy again, yeah, so that should be a good trend, a good area to buy. Now, your zone of entry happens to be around the same place as your trend line, which is here. Now, the third touch of the trend line, you can see what price did there with the wick on the 30-minute on the 30-minute trend line. Price taps with the wick and reject. So this alone now gives you the confluence you need, extra confluence. Then another confluence you would have is the timing of the trade, the time price came. So if you check the session of when price came there, it would give you another confluence. Okay, you can see just before Asia session. So that was the time price came to the area. So this is an example of a break and retest. I think I gave you guys an example of a continuation trend line for the bearish here. This is an example for bullish break and retest. Like, right? This is a bullish break and retest example. And this is a bearish break and retest example. I think this one. I took this trade, yeah. So I think this is an example of a bearish break and retest, yeah. So here. So for here, if I put on the line chart, you can see what price did here. Low, second touch, right? So third touch expected to bounce again, right? So instead of that, what the price do? Third touch breaks, then when price retests it, we drop, right? So this is what extra confluence for your level. So you can see what price is doing here. You see, when price retested, and my zone of entry happens to be a 5-minute RBS, which was around that area. So let me show you. So this is what an extra confluence for my trade. I don't know. Power just went out, so my Wi-Fi had gone off. So I have to use another Wi-Fi. I think this Wi-Fi is kind of slower. So yeah, that was what happened. Power went off. So the Wi-Fi went out. So that's why the meeting was interrupted. So yeah, 5-minute RBS. I mean, SBR was my entry. And then that area happens to align with what my trend line. So you can see price taps it, rejects the trend line, didn't break the trend line, reject the trend line, and then drop. So this was a trade I took. A sell I took where I was explaining to you guys that this sell was due to me wanting to take out this liquidity sitting below all these lows. Right? So this is it. So these are entry confluence. I think we are done with most of the parts of the strategy. Like the main thing that we just need to focus on now is what entry confluences, like session timing and trend lines. And those are the things we are going to be focusing on now. Entry confluences like entries, like trend lines and sessions, right? But if you still have any question regarding past stuffs, I thought you could ask me about the past stuff. You could ask me. But for now, the major things that we're going to be focusing on is what entries, confluences, like confluences for your entries, which we've talked about. Um, Trend lines, we're talking about sessions and trend lines. So those are the only two confluences you could use. So for this trade right here, which trend line did we have? I think we had a break and retest again for this one. Let's just confirm. No, just okay. Where to draw your trend line. You don't have to know where to draw your trend line to see a trend line liquidity. doesn't really matter. You can just see, once you see a series of trending highs or series of trending lows, right? A series of trending highs or series of trending lows, right? You could just draw and mark, right? Now, for you to get the best one, you must have at least 3 rejections from that trend line. If you see a series of lows where only 2 rejections occurred, it doesn't really count. But when you see a series of low with like 3 rejections or more, like you see this one here, I have this trend, this low here. First low, tap it, bounce off. Second low, tap, bounce off. Third low is on tap, bounce. Fourth low, fifth low, you can see before price broke it. So like this is a very good place that you can know that you have so many liquidity resting below this low, because price has been what, rejecting and accumulating so much money below this low. So many stops will be below this low for price to wipe, and that's the only essence of trendline liquidity. Someone buys here, stop below this low. Someone buys here, stop below. So when price come back after price has taken some buy side liquidities, it could come back down to clear off all of this sitting below this low. Everything sitting below this low will be cleared out. So that's it. So if you want to mark your trend line liquidity, you don't really have a specific area you're going to mark from. A bearish example, all right. Let me look for a good bearish example. A bearish example is everywhere. We have this bearish example here. Right? We have this bearish example here. Price must have rejected at least 3 times from that level. So we have this one. This one here. So we have price rejecting. How many times did price bounce off this trend line? How many times did price bounce off this trend line? 4 times, I think. So we have first time here, second time, third time, fourth time, right? And it doesn't necessarily have to be right on the trend line. And you can see this one that goes close to the trend line. You could also count that too. So all of these touches on this trend line, price is accumulating liquidity. So once price is done with taking the liquidity, the sell side liquidity, it will immediately reverse and what, go to clear out all of this liquidity sitting here. Okay, what's your next question? Okay, so you want to talk about this one, maybe this one too, or what? No, but
Yes.
this one doesn't meet our criteria. Like, look at this one. This one, how many rejections happened here? Just first one and second one, right? The third time is not really a rejection, it's a break. You can see. It's not really a rejection, it's a break. If you decide to place it on this week, it's still 2. If you use this as your starting point, it's just 2 rejections. If you use this, so you adjust your starting point of the trend line liquidity to the point where you have plenty touches. The one that best fits the most touches is your trend line, your actual trend line liquidity. Hope you understand. So, and you also need to understand structure too. So if you know where is a like for me, like let me give you a very good example of, you also need to understand structure. Like you see this trade I had right here, my sell targeted trendline liquidities, right? But why didn't I start my trendline liquidity and say, oh, I'm going to start it from here? Because I understand structure that anything below this area is strong, in my opinion, because of this double break of structure we have from here, right? So my trendline liquidity, I think I drew my trendline liquidity from somewhere here. This was the first trendline liquidity I had marked out. I've drawn trendline liquidity from here. I've drawn this compression liquidity from here. But price for some reason still went higher, and then I knew that price would still come down, because this price going higher was because they wanted to what, take out this TP here, make the higher high before they come down. So after the higher high was made, I readjusted the trend line liquidity just to the best fit, also keeping structure in mind, adjust to best fit. So I adjusted like this. I think I adjusted like this or something. Yeah. So you can see how many touches this has. You can see how many touches this has, and that's why my TP is here. Somewhere around here. That's why I have my TP there. You can see how many touches this has. So accumulation of so many money below here. Yeah, so you just adjust till you have your best fit, right? Yeah, adjust to the best fit. Like the one that has the most touches, while you keep structure in mind. One that has the most touches is the best one. Three and above. Three and above. If he has just two touches, I don't really consider that a trend line liquidity. Once I see price has rejected a particular trend line 3 times with the wicks bouncing off it 3 times, I know that okay, and more than 3 times or more. Yeah, then price is accumulating something below it, which must be swept. Is that clear? Okay. So you can see here my trend line liquidity from here. How many touches do you have here? The trend line liquidity I'm targeting from here. How many touches do you have here? 1, 2, 3, 4. Why is rejecting me? So that would be the one to target. That would be the one I'll target. So any more questions? Any further questions? Directional bias for current scenario. Okay, my bias is still bullish. I'm still bullish. You can see my bias, you can see my TP already. It's bullish. It's going all the way up to my trend line liquidity. That's where the target is. That trend line I showed you just now. That's where the target is. My standard is still bullish. So I'm still holding my trade from here. I'm still holding the entry from this place. No, I'm more like an intraday to swing trader. Like I focus more on catching the big move of every day. So if I'm going to be trading, yeah, the big move of the day is what I focus on catching. So if I'm going to be trading a particular day, I'll most likely catch the big move that happens that day, whether it's a buy or it's a sell. And that big move sometimes goes from intraday to swing. Just like, for instance, the sell here wasn't really a swing. It hit the TP in 5 hours or so. But the buy, it had been holding this buy for a while. So for now, I'm only focused on looking for buy entries, buy entries, buy entries, buy entries to keep on buying. Okay, I'm only focused on looking for buy entries to buy all the way to target. All the way to target. So just keep looking for entry models. Like as you can see here, after this first tap, price gave us, I think, type 3 entry model here because we had the double structure break from here. Double structure break from here. Let's see. The double structure break, and you know what the type 3 is where price give you. I explained to you guys where price give you a break and then come back and goes like this before coming to the entry. So you guys know what this is. So this is what happened here. So in this case, this becomes your liquidity. And as you can see, your liquidity already mitigated this first RBS, right? So you use the second one, which is the first one that's inside. And this is the next buy. And this is the buy setup that held. I took the next buy setup from the 5-minute time frame somewhere here. And this one got me this far before coming back to hit partials at break. Well, I've taken partials. So the remaining position hit break even. I think this position lasted for how many pips? Let me see. 820 pips before coming back. So I took partials, price came back. This morning, it hit break even on the last positions on this move. So I'm still holding. I'm still holding gold. I'm still bullish on gold, very much bullish for gold. So I'm still holding. But the thing is, for me right now on gold, I want to see all these lows go out. You see this trend line liquidity here. You see this liquidity. You see this place where we have these 4 rejections. Yeah, I want them out before I take any other trade. Before I buy again. Okay, for me, I want to see all of these liquidities out, like something like this. I think maybe this will give me a type 2 for the 30 minutes. This could give me a type 2 entry model. I'll still need to watch, maybe. Yeah. Then my entry will be from here. Like, this one will be like break of structure, as you can see what's there. So break of structure entry will be from there. Probably just buy. So other things to do is just MTF, check if there's other time frame areas around there too. So 3 hours, let's see. That's so you can see. Your stop losses, you could use a static amount of stop loss. You could use a particular amount of stop loss. Like you can just say you want your stop loss 150 pips, and any area you enter from, you put your stop loss 150 pips away. Or another way is another way of placing your stop loss is just placing it below safe lows. So for instance, if you take this trade here, if you buy here, since this low is safe, you can place your stop loss just below it. Why is that low safe? If you remember when I told you that if we have a 2 break of structure, something like this, right? Price coming back and then break, right? This here and this here break, this structure is strong. So if you want to take your entry, you could take your entry from there. So your low, your entry, your stop loss could be below this low, and then you could just target higher. So if you take this entry, you could keep your SL below this low since it's strong. Keep your SL below that low. If you're buying from here, you could keep your SL below this low as well. If you keep it below this low, I think you'll have how many pips of SL? 200 pips of SL. If you keep it below this low, you have 200 pips stop loss. Okay, let's go 15 minutes. So this is it. This is what you could be looking for. BE, I don't know. BE, I just move price my SL to BE once I feel comfortable enough to. I move it to BE. I don't really know the right time for BE. I just move my SL to BE once I'm comfortable. Now, what I mean by once I'm comfortable is if I'm on a trade and the price is buying and price has moved like a particular amount of pips, closed few nice bullish candles, I could put my SL to BE and the rest. Or sometimes I just don't put it at all. I just hold it till it's gone too far, like very, very far away from entry, then I can BE. So what's the next thing? All right. So for this, I'm not going to set a limit on this. I've just been looking out for this area. Like if price comes in this area, I might not take in direct entries, but I would observe. For now, I'll just observe. Because it could fly without coming here. Could really fly without coming here. Because we're already reacting from here. From here. So if we're reacting from there, this could be yeah, so this could be a little bit gives you the liquidity there to me. So could fly without coming there. So let's just see. Structure two. If you have the entry model two and then there's a liquidity swarming above entry model one, then you pick structure. The main thing is on understanding the structure, right? Understanding the structure. The aspect of knowing which setup you would use, model one or model two or model three, it comes deeply with experience. Like comes deeply. I won't even lie, because that's the most confusing part of it. Because you could see a clean model one and thinking that's the one, but it's actually a trap. While this model two is actually the nice one. That's why you need a lot of chat time and backtesting so you can train your eyes. Sometimes for me to know the right one, I have to switch multiple time frames, and then let's say if on this particular time frame I could see a very clean 4 hour level that I think price would use, then I want to look for which reason would want to make price use this level. Then I'll go back and I see that, okay, there's a model two that's corresponding with that level. I'll pick the model two over the model one. That's what I do sometimes, because that part of knowing which one comes highly with experience. So you need to do a lot of back testing and a lot of studying. All questions completed. Is that all the questions? Oh, let me explain BTC entry. That's true. Thank you for reminding me. Let me quickly explain that entry. Okay. Okay. So why did I take this entry? It's very, very simple. Why I took this sell on, this buy on BTC. Very simple. And the reason for the BTC buy, let me just show you guys. Here I had a top-down analysis because I don't really understand the full outlook of BTC. So I had to start my analysis top-down from the weekly time frame because I didn't really understand the full. If it was good, I could make an analysis there any day because I already understand what I know its history and how it has been moving. But with BTC, I had to make a top-down first to understand what is going on Bitcoin. So this is what I did on Bitcoin. As you can already see here, there's a break of structure from here. There's liquidity from here on the weekly time frame. So when I saw that price came back inside here, break of structure, liquidity, and we are back on this weekly support. So all I wanted to see was what price give me. Now this is my macro time frame, right? My macro time frame. So what I wanted to see was what on the micro time frame. Let me see a structure on the micro time frame, either a shift or something. And on the 1 hour time frame, in the 1 hour time frame, there was structure shift on the 1 hour time frame to confirm trend change, right? So there was structure shift to confirm trend change on the 1 hour time frame. So all I just saw after this structure shift was that price was giving us what a trend. We had a trend forming here. So we had a low, a high, a low, a high, a low, a high, right? So when I saw this, all that I wanted to see was which liquidities were inside the range for me to sell. So here, after seeing that, what I looked out for was okay, after seeing that, what I looked out for was this. You see this inside this range, I looked out for what the liquidity sitting inside the range and this one here, my liquidity. And why did I pick this liquidity? Because I looked at this trend here, this mini downtrend we had on the 15-minute time frame. Level and price broke structure. So after this downtrend, price broke structure and pulled back inside this first pullback liquidity, but it never came back inside after this liquidity before we made the big break of structure here. So also trend line liquidity also. And here you could mark out and you could see this. You could see here we already had 3 rejections. So this liquidity that I previously marked out as my liquidity because of this break of structure and the first pullback also happens to align with the trend line liquidity. So what do I do next? Closest one to my liquidity, right? So closest zone to my liquidity was what resistance becomes support. So that was my entry point. That's how I got this BTC trade. That was my entry point. Resistance becomes support. And the price took a long time before coming there. So you can see. So I entered this Bitcoin trade. Is it clear? Hello? There? Okay. That was why I took the BTC. Right. So, any more questions? Any more questions before I end the session? Any more questions? Yes. If you want to go a little bit aggressive, you could go 1%. If you want to be conservative, you could go 0.5%. So let's say if you have a setup that's very clean and you are sure you could risk 1% since it's worth more, since it's cleaner and it's very nice. So you could risk 1% and you know expect a potential higher gain. But if you have a setup whereby you're skeptical, you could just do 0.5%. Is that clear? Okay, what's your question? What's your last question? Structure shift on M3. Structure shift on. Okay, if you have in a situation like that, right, it depends on how it looks. The structure shift on M3 can be a structure shift on M5 as well. It could be a structure shift on both time frames, or on one time frame you could have break of structure, like two break of structure on one time frame, while on one time frame you just have a structure shift. Now let me give you an example. 3 minutes may look like this. Let me say 3 minutes looks like this, right? On the 3 minutes, here is a body, then price break here, and the 5 minutes might look like this. Meanwhile, here on the 5 minutes is a week and the price break here too. So two of them might have the structure shift at the same time, right? But in another case, it could happen like this, whereby let me use this as 5 minutes. 5 minutes could shift structure like this, while the 3 minute time frame, you could see something like this on the 3 minute time frame. Now, if you have something on the 3 minute time frame, then maybe you might have the two break of structure on two. So on the 5 minutes, you have one shift in structure. On the 3 minutes, you have two break of structure. So that has flexibility. You need to be flexible. And before I go, let me know if I can look for an example of something like that and just show you before I leave. Let me use this cell for an example. Right. Okay. So as you can see here on the 5 minute time frame here, this 5 minutes, we have two break of structure. This one and this one, right? So here, it's 5 minutes. And let's see what 3 minutes look like. Okay, the 3 minutes. On the 3 minutes, you could see that we already had a shift from here. There's already a shift from here. Then price react from this level. Yeah. So there's already a shift from there and price react from that level. Now, this area where we had this double break of structure is also cleaner on the 3 minute time frame, as you can see. It's cleaner here because we have break of structure, then first pullback liquidity. After liquidity was grabbed, the drop happened. So it's cleaner it's the same, it looks identical on both time frames. So in a case where it looks different, right? If you are sure of the bias, both of them will still give you an entry in their own way. The 5 minutes might be giving you an entry based on shift and pullback. The other time frame might be giving you an And in some cases, one is cleaner than the other, so you go with the one that's cleaner. In some cases, the 5 minute might not be clean. Maybe the 5 minute might just break and pull back, no liquidity created. While on the 3 minutes is a different story. There's liquidity created on the 3 minutes. So depends on the one that's cleaner. Is that okay? If both have liquidity, like it depends on the model. Like they don't like it depends on like if I have this, if I have let me say a shift in structure from here, first pullback and price come back and give me an entry. And I have this on both time frame. Let me say on the 5 minutes, it looks just like this. On the 3 minutes, there was something here. And on 3 minutes, it looks like this on the 3 minutes. This. On 3 minutes, it looks like this. Okay, let me say something like this. Then it just means that the 3 minutes is giving me this double break, and 5 minutes is giving me a single break. It depends on how it looks on each because every time the chart prints different stuff. So it depends on how it looks. There's no rule that says that the 3 minutes and 5 minutes contradicts themselves. Sometimes they are aligning. Sometimes the 3 minutes presents you an opportunity to take an entry. And once that entry comes up, there will be no entry opportunity on the 5 minutes. The 3 minutes just gives you the entry opportunity. And once you take that one, price just flies and goes without ever coming back. So sometimes the 3 minutes saves you. Sometimes the 5 minutes saves you. You just have to be flexible. That's what I said. I've told you something like if you get confused at any point, any setup that gets you confused, if I don't post about the setup, then you could show it to me, right? And tell me, look at this. This is what I see because every setup is unique. On a particular case, the 5 minutes and the 3 minutes might look so clean. In particular case, the 5 minutes a bit confusing, 3 minutes clean. So I will tell you what to do, right? Or you could just totally skip the setup and learn from what happens afterwards. You could also, you know what, I won't take this one. I will just learn from what's going to happen. So whatever happens, you use that to learn. So that's easy. Or you could send to me to explain. Yeah. So any more questions? Okay. All right. So I'll send out both session. Okay. Thank you too. I'll send out both sessions recordings, both the ones from Saturday and the ones from today. I'll send all of them out later, maybe tomorrow, because they have to be watermarked. All right.